Welcome back. You're still tuned into Trading Hour. Markets have recovered a tad bit, and we have been getting a lot of commentary on AI at the AI Summit and Infosys AI Day as well. But what's happening with markets? Let's discuss some fundamentals as well. Rupal Bhansali, founder, CEO, and CIO, Double Duty Money Management, is joining us now. Rupal, good morning. Thank you so much for joining in. And interesting times. We've been talking a lot about AI, how it has impacted the IT services stocks, and generally whatever we've been seeing in the last couple of months, it's a lot about geopolitics. How do you view India in that way?
So I think AI is actually a huge question mark in my view. I think it's going to be far more binary than bankable going forward. And I think India is actually not well placed potentially from that standpoint. From an investment standpoint, though, I would much rather own companies that are AI resilient than AI victors. I think that trade is behind us. So, for example, if you think of Latin America, commodity exporter, AI is not going to grow wheat. It's not going to unearth copper. And I think those sorts of things are more bankable. And those markets are very cheap. So I know that's not really talking about AI per se, but I think actually AI is going to have very far-reaching ramifications. We don't know how to handicap it. I don't want to pretend here to say that, we know exactly how it's going to shake out. I mean, the market's going to be very volatile in terms of winners and losers. So I'd much rather just sidestep the whole trade.
Okay.
And focus on what's resilient from AI rather than winners and victors and victims.
So you're not bearish or you're not bullish on the AI theme at all. It's not something that you're looking at all. But do you think that will continue to be a risk for Indian markets? The way these stocks fed in the last couple of weeks, what is now the attraction point for, say, FIIs or investors to buy into India?
I must confess, I'm not convinced that India is a buying opportunity. I know the markets have been weak for a couple of years. I know that, the Indian market certainly feels, Indian participants in the market feel it should go up. But markets don't go up because you want them to. They have to go up based on fundamentals and valuations. And to the extent that you ignore those two things, you're going to be kind of challenged. And the last 2 years, we've seen a lot of earnings downgrades in the Indian market, which is quite astonishing. Because the prior cycle, we saw a lot of upgrades. And so when you have downgrades and you've already paid up, for a very rosy outlook, then you have a valuation reset. I was just checking the valuations of the Indian market. I mean, even despite the correction in the mid-caps, the Nifty, et cetera, has held up sort of relatively okay. But in the mid-cap space, you're still looking at 31 times trailing earnings. People are forecasting 23 times, but all of these are very punchy multiples. So you really need to have the underlying fundamentals, live up to those valuation expectations. I fear disappointment.
Okay.
Rupali, hi. This is Ritu. You're saying it's a bit of a disappointment. You don't really see a big opportunity here. India has corrected, but you say it's still not attractive relative to what you're seeing globally. What will change your outlook from here? What's really missing? Is it valuation comfort? Is it earning visibility? And, in your note, when you say dividends are likely to be the dominant source of equity returns going ahead, are you effectively saying price appreciation is going to disappoint from here on?
Riddhi, you said it all. I can only echo. Look, I'm an independent thinker. I'm a contrarian. Does not mean I do the opposite of what everybody else does, but you have to have an independent point of view that you can validate. And I think for the next decade or so, you see, the last decade has been a lot about price appreciation. And that's kind of, what's really driven the returns of the market. I think the next decade, dividends are going to take on the larger responsibility, the center of gravity. And remember, over the 250-year history of stock markets, which you all sort of like to quote and talk about the high returns, a very large portion of those returns have come from dividends and reinvesting those dividends. So I think the attention has to skew towards dividends. In fact, it's something that's available all over the world. Sadly, not much in India. The Indian stock market has a dividend yield of about 1.2%, whereas some of the portfolios that we manage, have close to, 6+% dividend yields. Now, I'm not saying that, that's the only thing to consider, but I do believe the baton is going to be shifting to the dividend yield strategies. And I think they also act as a buffer, to the extent that markets don't perform, you can count on dividends. Dividends tend not to get cut that much. They tend to be far more stable. Again, provided you do your homework, it's not all dividends are not stable. But I would say, yes, that's a very big call I'm making. The global markets, there's a lot of opportunity from that vantage point.
Rupal, you've been championing non-consensus investing as sort of the only way to deliver outsized returns and what we're seeing globally today. But what we see is most allocators looking into crowded growth and momentum trades. So, where is this non-consensus opportunity, if you can spell out for us? You spoke about the AI resilient trade. Where exactly do you see that in India?
I don't see it within India. This is the challenge. I'm a global investor, so I can cast my net very wide. I would actually argue, like most investors in the world, there's a home country bias, right? Indians want to invest in India. That's where the bulk of the money is. I would actually make a call for diversifying and frankly, looking at opportunities abroad. And I think Indians are able to invest abroad. The question is of taking advantage of that opportunity. Unfortunately, a lot of Indians, when they do invest abroad, they invest in the US market. I mean, that's true of course, global investors too. I'm actually quite bearish on the US market as well. I actually think the markets internationally, whether it's Europe or Latin America, it's not the conventional answer you'll get from most people. I'm sure, people are favoring, for example, Japan all of a sudden is a flavor of the month, of the year. And frankly, going forward, I hear a lot of investment appetite for it. I'm not bullish. You see, the reason to be non-consensus is not for the heck of. It's a very dangerous thing to just do the opposite of what everybody else is doing. You better be correct. But I think what is important in markets is that the consensus is already in the price. So if you want to beat the market, you better have a non-consensus point of view. That's the nature of markets. And so Japan, for example, so much optimism because of the election, the new regime over there politically and economically, interest rate-wise, so much has been priced in. I actually fear there's a setup for disappointment. On the flip side, you look at Brazil, where people are so worried about the politics. They're so worried about, the currency. And frankly, the politics are improving. The currency is more set for appreciation than depreciation. So what is perceived to be a source of risk could actually be a source of returns. So my non-consensus point of view is that you should always look for opportunity where others are not. There's always opportunity to be found in global markets. I mean, again, my remit is very large, so that sort of, allows us to be very discerning. And I think the Indian investor is able to go abroad. They just need to think differentially.
Okay, so in that case, you spoke about Brazil. What are the other international markets that you think are doing well right now and they should be on Indian investors' radar as well?
This will sound very counterintuitive because, another country that is totally out of favor is France, right? I mean, the French politics are pretty bad, the fiscal deficit, elections, I mean, all the stuff, the backdrop. And Europe is viewed as such a has-been, in terms of people's perception. And yet France has some amazing companies. You look at, in the last decade or so, stocks like Louis Vuitton, Hermes. I mean, these stocks have doubled to quintupled. Okay, that's amazing absolute returns to get. And less well-known names like Schneider Electric. It's actually a play on data centers. It happens to be a French company. But if you're not looking there, you're not going to find it. Safran, it's an amazing play on air traffic growth. All of us want leisure travel, short-haul flights. Narrow-body engines, Safran makes those engines. That is a way to play. This stock is, again, quintupled over the last decade. GTT, which is the NVIDIA of the engine inside an LNG tanker. Post the Ukraine war, you have to ship oil because the pipelines, are obviously not operating. And even India, for example, when you get oil from far off places, it's LNG tankers. There's only one company in the world that really makes these, I'm going to call it the engine for these LNG tankers. And the volume demand for it has exploded because, shale fracking in the US, people want to export, right? There's so many gas terminals being built. These are very bankable ways to make, I would argue, it's an opinion, when I say bankable, there's no guarantee in investing, but you can see the line of sight of these things growing. There's only one company that's, so everybody's looking at NVIDIA for AI. Look for the NVIDIAs in other parts of the market. It happens to be a French company. Roughly 12 times earnings, a 5% dividend yield, a strong balance sheet, net cash. I mean, this is the kind of opportunity you can find even after markets have soared all over the world over the last 15 years. You just need to open your eyes and be a non-consensus thinker. I will just argue, that's my job, right? I mean, I have to find value and not sort of lament that there is no value in the US market or the Indian market.
Okay. So, that was very interesting. I track the energy space and I never knew about this. So it's very good to know, learn something new. But quickly, before we let this interesting conversation go, what will make you bullish on India from here on? Are you expecting it to correct further, reach a certain level of valuation or see more earnings recovery come by?
Look, I'm actually most enthusiastic about Modi's plans to reform the labor market in India. I think any country, if you look at the genesis of sustain GDP growth. For a while, you can sustain it with infrastructure spending, with deficit I mean, all sorts of things, can happen. It happened in China for a long time and, then it reset. But ultimately, if you need a country to be on a very stable footing, the people have to make money. And, the spending cycle has to continue, the saving cycle, the investing cycle, right? So job creation. So labor market reform in India, I think would be a game changer. And that's something that would make me very bullish.
Okay, take that point. A pleasure speaking with you today, Rupal. Thank you so much for joining us in the studios and telling us what you are bullish on, the contrarian trade that you speak about. A lot of learnings. Thanks a lot for joining in today.
Thanks for having me.
With that, we'll slip into a short break. On the other side, we'll discuss markets and stock-specific action.